In a world of financial uncertainty, where every investment decision seems to carry the weight of the world, the burning question on everyone's mind is this: is now a good time to buy stocks? The landscape of investing can be as unpredictable as the weather, and with inflation holding its ground, many are left wondering how to navigate the turbulent seas of the market. But as the waves of uncertainty rise, a wise sailor doesn't abandon the voyage. Instead, they adjust their sails. So join us on this cruise to explore whether the stormy sea of stocks conceals hidden treasures. So whether you're a seasoned investor or just dipping your toes into the world of stocks, stay with us as we decipher the signals, analyze the market, and embark on a quest to answer the age-old question: is now the right time to dive into the world of stocks? Welcome to Capital Crew, where smart investments begin. Investing, like any voyage, is not without risk. Your capital is always at risk, and the value of investments can fluctuate, but it's how you navigate these waters that can make all the difference. Let's begin by looking at the performance of the UK's FTSE. In the midst of economic challenges, it has weathered its fair share of storms, but is currently trading at pre-pandemic levels. Many big companies are displaying resilience even in the face of a cost of living crisis. For those who believe in the old adage, buy low, sell high, the current stability might suggest that now is a good time to buy shares. But, as always, we can't exactly predict the future with certainty. Some seasoned investors would argue that it's futile to time the market, advocating instead for a long-term approach. Investing for the future rather than short-term gains allows your investments to ride the market's ups and downs. It's a strategy that emphasizes patience and discipline. This year has seen the stock market experience turbulence due to the failures of major banks, including Credit Suisse. However, swift regulatory interventions managed to stabilize the situation. The lessons learned from such crises can be essential reminders of the market's unpredictability. Despite a volatile year, global stock markets are showing resilience, with some sectors bouncing back after grappling with the energy crisis. Companies directly affected by energy challenges are finding it difficult to maintain profit margins, which may have impacted their share prices. Is now a good time to invest in companies hit by the energy crisis, hoping for a rebound once the storm subsides? The truth is, we can't really foresee the outcome, and such decisions come with inherent risks. So how should you approach investing during uncertain times? Well, here are the 4 golden rules to guide your way. Stay calm, keep emotions in check, and make rational investment decisions. Consider your aims. Tailor your investments to your unique circumstances and objectives. Make the most of tax relief. Utilize tax-efficient investment vehicles like ISAs and pensions. Drip feed your money. Invest incrementally to potentially benefit from market fluctuations. If you're inclined to pick your stocks, it's crucial to research companies thoroughly, assessing their financial health and competitive advantages. Moreover, consider sector-wide factors and avoid making emotionally charged decisions. Diversification or investing across various sectors can help manage risks effectively. When researching for sectors with potential, keep an eye on the following: fintech. Remote work and digital payments have driven growth. E-commerce. Online shopping's popularity persists. Renewable energy. Government support and climate awareness offer opportunities. Online gaming. Resilience during market turbulence. Commodities. Precious metals like gold are seen as safe assets. Banks. Potential for recovery in an economic rebound. Leisure sector. Post-isolation, people crave experiences, benefiting strong balance sheets. Remember though, every investment carries some degree of risk. While it's impossible to eliminate risk entirely, you can, however, reduce it. How exactly? Opt for less risky assets such as bonds. Diversify your portfolio across asset types, companies, sectors, and countries. Choose a cautious risk level if you're using a ready-made portfolio. In conclusion, whether now is a good time to buy stocks while the market displays signs of stability, no one can really predict how it will perform in the coming months or even years. Investing during uncertain times requires a calculated and patient approach, a willingness to ride out market volatility, and an acknowledgement of the inherent risks. Thank you all for joining us on this journey through the world of stocks and shares. Remember, the path to financial success is not always clear, but with knowledge and a well thought out strategy, you can navigate the challenges of the market. Stay tuned to Capital Crew for more insights into the ever evolving world of finance. Until next time, happy investing.